So we'll go to the next session. I think be introduced by Sendil, and CP will be Chandraprakash on the tax front. We'll really talk some tax proposals now. It was a very unique session with case studies, but we'll have for the panel session, they should talk a lot on the industry front, so it'll be good to share.
Good morning to all. I introduce Mr. Chandraprakash, subject matter expert. He is a partner in Deloitte, having more than 17 years of experience in the field of corporate tax, including M&A, international taxation, and foreign exchange related matters. He also worked as an intern in Deloitte Hong Kong office, where he coordinated with various Deloitte offices across the Asia Pacific region for matters relating to large Deloitte clients in the region. He currently focuses on ER&I clients, and he has worked extensively with the clients, advising on cash repatriation strategies, tax efficiency, while consolidation and restructuring of entities also, including industry-specific regulations. In addition, he routinely advises on corporate tax matters and FEMA matters. He also met with regulatory authorities and obtained various regulatory approvals under foreign investment regulations. He is a chartered accountant and holds bachelor degree in commerce. We welcome Chandraprakash for this seminar.
Thank you. Good morning, everyone. So, very interesting discussion on the economic aspects and the related areas. So now we move on to the direct tax proposals in the budget. We'll get into the specifics of some of the amendments that are proposed in the bill and discuss the nitty-gritties of those provisions. Are we going to have slides, Sindhu? So while the slides are being put up, right. So the finance minister, when she started with the direct tax proposal, she said that intention of this proposal is to ensure continuity and stability in the tax regime, and also to ease the administration of the of taxes. So, in line with what she mentioned, in terms of corporate tax rate, there is no change. So we basically have a 30% base tax rate and an incentivized tax rate of 22%. For new manufacturing companies which start manufacturing operations prior to 2024, the tax rate is 15%. There's also a 25% tax rate for small companies, meaning having turnover of less than 400 crores. So no change in the corporate tax rate. The changes that are proposed in the other areas. So we start with, there was a TDS which was introduced under section 194R last year, and that was on various benefits and perquisites which are provided. Now, with regard to that, there was a position which was taken by taxpayers saying that if it is in cash, then it does not fall within the purview of the term benefits and perquisite. And that was based on a ruling by Supreme Court in the case of Mahindra and Mahindra. So to negate the impact of that ruling, to negate the position that the taxpayers were taking, there is an amendment proposed which says that benefits and perquisites will include cash and non-cash. So even if it is in non-cash, it will fall within the purview of the term benefits and perquisites. Accordingly, it will be treated as income for the purpose of section 28, and TDS also has to be deducted on the cash component under section 194R. The next one relates to amounts to be paid to MSME sector. So to encourage, boost our incentivized MSME sector. Any payment which is due by a taxpayer to an entity which qualifies to be MSME, the payment should be made within the date specified under the MSME Act. If the payments are not made, then the expenses cannot be claimed as deduction in the year. It can be claimed only in the year in which the payment is actually made. So this is more an extension of 43B, where the deductions are allowed on cash basis, payment basis, has been extended to payments to MSME as well. On presumptive taxation, so small taxpayers can choose to a presumptive taxation regime where they can opt for, they can offer a certain percentage of their gross receipt as their taxable income. The limit for a small taxpayer was 2 crore. So your turnover, if your turnover is less than 2 crore, then you're eligible. That is now extended to 3 crores. with a condition that 95% or more of the receipts by the business should be in the form of non-cash, should be through banking channels. Similarly, for professionals, there was a presumptive taxation and the limit was 50 lakhs. The limit is extended to 75 lakhs, provided again the cash component of the gross receipt is less than 5%. Tax incentives for IFSC sector, IFSC units, this is in international financial centers. So if the IFSC center provides location of funds into IFSCs, right? So if there is an existing fund, if there are assets of an existing fund which are outside IFSC and that has to be relocated into IFSC, there was an exemption which was provided last year, and the time limit for that exemption was 31st March 2023. Now this time limit has been extended to 31st March 2025. So when you transfer assets from an unit which is outside IFSC into IFSC, there will be no tax both on transfer of asset and also when the unit when the fund allocates unit to the unit holder in consideration of transfer of assets, then the unit holders are also not subject to tax, provided this transfer happens prior to, or relocation happens prior to 31st March 2025. For startups, we discussed, there is an benefit which has been extended now. The condition for incorporation of an entity for startup, the date was 31st March 2023, the sunset clause, which has now been extended to 31st March 2024. For carry forward of losses, again, startups have a special, so whenever there is a change in shareholding of more than 15%, the carry forward loss gets impacted. But startup had a relaxation that within first 7 years of incorporation, there are a lot of investment happens and there's a lot of shareholdings changes that happens in a startup. There was a relief which was provided for a period of 7 years. Now it has been extended to a period of 10 years. There's a specific relief to NBFC sector for thin capitalization. So there is a limit on interest deduction. Whenever the payment is made to a related party, a non-resident related party, then the interest deduction is deduction is restricted to 30% of the EBITDA. That restriction was not applicable for banking companies. The similar relief has been extended to NBFCs as well. A lot of changes in the cooperative sector to boost manufacturing activity in the cooperative units. There is a 15% tax. So manufacturing entities are eligible for a 15% tax, new manufacturing entities. That benefit is now extended to cooperatives if they commence the manufacturing activity before 31st March 2024. Now, this is the due date, the sunset date for a normal company as well. And as Rajesh was alluding, this date has not been extended. Now, manufacturing cooperative units which are now set up, newly set up, whether they will be, because there's a lot a longer gestation period for a number of, lot of manufacturing companies, whether they will be able to commence the manufacturing operations before 31st March 2024 itself is a question. But this is a benefit that has been extended to cooperatives. Also, for loans and deposits, there are anti-abuse provisions where if the transaction happens in cash, then there are penalties, and the limit for the limit is 20,000 rupees. For primary agricultural cooperatives and for rural development bank, when the transactions is with the cooperatives and rural development bank, the limit has been now extended to 2 lakh rupees. So you can do a cash transaction up to 2 lakh rupees. Also, whenever there is a withdrawal by a cooperative society, there is a TDS which is applicable if the withdrawal is more than 1 crore in a taxable year. That limit for a cooperative society is increased to 3 crore rupees. Some rationalization on provisions relating to charitable trust and institutions. There were 2 major Supreme Court rulings which came in last year, impacting the way the trusts are taxed. Major milestone rulings. Some of these are fallout of those Supreme Court rulings. So one of the changes which has come in is whenever there is a utilization of fund out of a corpus, or if there is a repayment of loan, it was treated as application. If there was a loan taken, then it was treated as an application prior to 1st April 2021. Now, the proposal which is put is that if that money is again deposited back into the corpus. The money utilized from the corpus is deposited back into the corpus, or if the loan is repaid, then that again would not be considered as an application. So that's one change, and this will again be subject to TDS and non-cash payment rules, which are normally applicable for commercial transactions. Donation to another trust, or a trust can give donation to a trust, another trust which has a similar objective, and that is considered as application of income. That has now been and that is considered as application of income is now restricted to 85%. So if you give donation of 100 to another trust which has a similar objective, the entire 100 will not be considered as application. Only 85 will be considered as application of the income. On exemption by statutory bodies, there are statutory bodies like housing accommodation, planning bodies which are set up by state government, development of towns which are set up by state governments and central governments. Now, Supreme Court said that whenever a charitable institution carries on an activity, they defined a threshold. They said that if the margins in those activities are significant, then that may not be considered as a charitable activity. That will be considered as a commercial activity. And there was an exemption which was given for statutory bodies. Now that exemption, which was given by Supreme Court, has now been brought into the law. So now statutory bodies, even if they carry on these activities, they may not be considered as carrying on commercial activity, even if the margins are higher than the usual margins. Due date for filing forms. So for accumulating income, so the charitable institution can accumulate certain income. If they are not able to spend, then they have to deposit in specified forms, specified modes. Now there is a form which needs to be filed. The due date for filing that form has now been made as 2 months prior to due date of filing the tax return. Another change which is in relation to the time within which you can make application for registration of trust. There is a streamlining which has been done, and the application can be made even after you commence the activity, but within 1 month. Also, there is a term called specified violation, which imposes certain penal consequences whenever there is a violation. The term has been extended to include whenever you make an application, if there is an incomplete information or inaccurate information, then that also would be considered as a violation. Certain provisions, certain amendment proposed for M&A. One significant one is on share premium. Now, whenever there is a share premium which a company receives from a resident, till now the provision says that if it is from a resident and the premium is not justified compared to the fair value of the shares that are being issued, then the premium is considered as income in the hands of the company. Now, these provisions are being extended even for investment received from non-resident. There is a dichotomy here because under FEMA regulations, foreign investment regulations, a non-resident, when the shares are allotted to a non-resident, the minimum value should be the fair value, right? And the proposed amendment says that if the value which is received is more than the fair value, then it is taxed in the hands of the company. What this means is that though both the provisions are contradictory to each other, the fair value itself has to be very robust when the investment comes from a non-resident, so that it cannot be questioned both for undervaluation and for overvaluation. Market-linked debenture is considered as, till now it was considered as specified securities, and it was eligible for concessional tax rate which is applicable for specified securities, say 10% without indexation, 20% with indexation. Now there is an amendment proposed which says that market-linked debenture, irrespective of period of holding, would be considered as a short-term security, short-term, and the gain on that will be considered as a short-term gain. Now that has a huge implication. So this will normally now be going forward be taxed at a normal rate. So individual, if it is held by individuals, then the tax rate could be as high as 39% if they are falling in the highest tax bracket. Whereas in the earlier, prior to this proposal, they could have taken a 10% tax rate without indexation. For JDA, Joint Development Agreement, there was an ambiguity on full value of the definition of full value of consideration. So in JDA, there is a consideration which is given in the form of units which are being developed, and there was a position taken to exclude the cash component from the consideration for JDA. Now there's a proposal to include the cash component also, and accordingly the TDS provisions will also apply on both the cash and the non-cash component. Another change for startups, carry forward of losses. Now startups where whenever there is a change in shareholding, I think we discussed this point, that the period has been extended for a 10-year from the existing 7-year period. For business trust, there was certain income of business trust. So business trust is normally considered as pass-through. So a trust is not itself is not subject to tax, but the unit holders of the trust is subject to tax. There was some residual income which is taxed in the hands of the business trust. In addition to this, there was some income which was getting untaxed depending on the structure of the business trust. Now that residuary portion has now been proposed to be taxed as income from other sources. So if on a component of income of the trust where neither the trust nor the unit holder is paying the taxes, that will be subject to tax as income from other sources in the hands of the unit holders. Cost of acquisition of certain assets. So here where the cost could not be determined for some intangibles, let's say if they are self-generated or for some reason if the cost could not be determined, then a position was taken that the computation mechanism failed, and again this is based on judicial precedent, and therefore no capital gains. So that is now proposed to be amended, where the cost could not be determined, the cost will be taken as nil. Whenever there's a business reorganization, let's say a merger or a demerger which extend beyond a financial year, there was a proposal which was there was an amendment which was effected last year, which said that you could file a modified return even beyond the due date of filing the original or the belated return. That provision is now extended for an assessment reassessment also. So if there is an assessment or reassessment which is completed and the entity has undergone a reorganization with a retrospective date, then the assessing officers should necessarily take into account the reorganization that has taken place. Strategic divestment, this is for public sector companies. Change in shareholding, where there is a strategic divestment by public sector company or where government holds, are in the companies where public sector undertaking holds 51% stake. Even if there is a change in more than 51%, the carry forward of loss will not be impacted. Online winnings, there's a specific regime which has been brought now for online games like Dream11, which is quite popular now. So these online winnings will subject to tax at the rate of 30%. They also specified a mode in which it will be taxed. So it will be taxed on the net earnings at the end of the year. But during the year, if there is a withdrawal, then the withdrawal itself will be considered as the net earning, and that also will be subject to tax. Also, TDS provisions have been rationalized. Online gaming is now included for TDS, and the threshold of 10,000 has been now to be considered on an aggregate basis from all kind of winnings. Winnings from lottery, crossword puzzles, horse race, as well as from online gaming. Some other rationalization on TDS provision, we discussed this, benefits and perquisites, section 194R, a very hotly discussed topic. Now non-cash component is also included within the purview of the term benefits and perquisites, and therefore on the non-cash component also TDS will have to be deducted. TDS credit, so there's a in case of mismatch between the TDS credit which is given and the income which is disclosed, then there are a lot of confusion, and the differential income is always getting taxed. There are cases where income is offered to tax in 1 year and the TDS is deducted in another year, depending on accrual and cash basis between the two entities or the two taxpayers. There is a provision which is proposed where it says that the TDS credit can be claimed in the subsequent year, not in the prior years. But if there is a case where income is offered to tax in the current year and the TDS is deducted in the subsequent year, then the credit can be claimed. On mutual fund units, this was a specific provision 196R or so, 196R. Now this was not covered by 195, and therefore there was always an ambiguity on whether treaty benefits can be claimed by non-resident when they invest in mutual funds. So that has now been extended. So the TDS rate would be 20% or the treaty rate, whichever is beneficial. Similarly, for nil rate, application can be made under 197. that is that there was ambiguity on whether a trust, business trust can claim, or a unit holders of business trust can claim that, make an application under that provision. That is now made possible. Non-filers of tax return, there's a higher tax, TDS rate which is prescribed if you have not filed return in the last 2 years. That is now being rationalized. So if return is not filed for a specified reason, and those specified reasons would be notified by the government. Now, if the returns are not filed because of those specified reasons, then would be relieved from a higher TDS rate. On TCS for payment under LRS, there is a 5% TDS whenever the payment, whenever remittance are made under liberalized remittance scheme for any reason. And there was a relief for payment for education and medical treatment. Now that relief for education and medical treatment is restricted to 7 lakhs, payment above 7 lakhs, even if it is for medical treatment or for education, a TDS has to be deducted at the rate of 5%. And for all other cases, for overseas 2 program, the TCS rate has been increased from 25% to 20%. On dematerialized securities, listed securities, if there's an interest, there was an exemption because listed securities, dematerialized form, there are a lot of transfers that happens. So for administrative convenience, there was an exemption on TDS. For some reason, this exemption has been taken off. So even if it's listed debentures, which are in dematerialized form, if there is interest paid on such debentures, TDS will have to be deducted. Advance tax, there is a concept of updated return. So if there is an income which has been missed or omitted to be filed in the original return, you can file an updated return. Mode of computing interest on non-payment of advance tax, there has been rationalization. So the previous advance tax would also be considered. Tax holiday for SEZ unit, even though there's a sunset clause that unit should have commenced operation prior to 30th June 2022. There are a number of units which are still claiming exemption because the period of exemption is 15 years. Now, there are certain conditions which have now been introduced. One is that the export earnings, so the exemption is on export earnings. So export earnings should be realized within a period of 6 months. And second is that the return should be filed within the due date. These two were not there, and this has now been introduced. Set off of withholding tax and the refund and the demand, the tax authorities can now set off. The provisions have been rationalized. Earlier the provisions were there, but now that has been brought into one particular section. And news agencies sunset clause has been withdrawn. For some reason it's not working. So I think we have come to the end of the major direct tax proposals. There are some changes on administrative side, which is relating to assessments and reassessment. The timelines have been specified for issuance of notice, etc. But there are no material changes. These are more for administrative convenience and more for the tax authorities. So with that, we have come to the conclusion of the direct tax proposals. And if there are any questions, we'll be happy to take. We can take the question also at the end of the session. Okay, so there is a provision, so you can make remittance outside India. An individual can make remittance outside India. There's a specific scheme of RBI which is called liberalized remittance scheme. Now under liberalized remittance scheme, when you make a remittance, you have to pay TCS, right? And there was an exemption on the medical and education because they are for specific purposes. So the limit of LRS, the liberalized remittance scheme, is 7 lakhs. Per year you can remit up to $250,000, right? What the proposal says is that the relief will be available only to the extent of 7 lakhs for education and for medical. Any payment made beyond 7 lakhs will be subject to TCS. And if there is a foreign tour, so again under LRS you can make payment to a foreign agent for foreign tour. There the TCS was 5%, is now increased to 20%. It will go through the authorized agent. So authorized agent will insist for TCS.
So the TCS will be on the remitter?
Remitter, yeah.
And how you will be claiming it back?
It will be reflected in your tax return. So when you disclose your tax return, so it's just, so TCS is like your advance tax. So you remit 7 lakhs, it's your expenditure, it's not income, but you pay TCS on that. Let's say you paid 7 lakh, you paid 35,000 rupees. The 35,000 will be reflected as credit in your tax return, and against your taxable income, you will claim credit. So it's not an additional over and above, it's not increasing your expenditure, but I think it's a mode of collecting information for the government. So you pay taxes, they know that you have remitted 7 lakhs.
So do you think that tour agents make more than 20%?
Sorry?
They think that tour agents make more than 20%.
Yeah, for tour agents, it is on behalf of the tour agent.